So, if you've been afraid of the stock market because of the news that you've been hearing that you can lose money in it, I did. And I lost about 46% or almost half of this stock's value. And I'm sharing it with you so that you learn from my mistake. Hi everyone, welcome back to the channel. If you've been here before, you may realize that this is different from the typical content that you see in this channel. If you're new here, I'm PPE and this is the Peso Pro episodes where we're talking about money management tips and peso tricks. Today, I'm gonna share with you something you don't often see in social media. If you see friends talking about trading, stock market, typically what you would see are people who post massive gains. 50% gain here on this stock, all greens across the board. What's less talked about are the reds that each investor is actually exposed to. I personally have gone through this roller coaster of an emotion, and in this video, we're gonna talk about why this happened to me and why I'm still in the stock market after it happened. As of a few days ago, I lost almost 50% of a stock's value in my portfolio. And we're talking about China Bank stock. I've been holding on to this stock for at least around 5 to 7 years now. I bought it at a very high premium thinking that the bank would fly and go to greater heights. However, in the past 5 years or so, the bank has continued to plummet and now it's in the 20s and now I'm sitting on a 50% deficit. This video is intended for people who are scared about the stock market and are thinking that they are risking their money into sort of like a gambling machine, similar to a casino. What I'm here to share though are 3 big realizations that I had in my stock portfolio so that you can learn from whatever I've learned with this exercise. Just as a disclaimer, I'm not a financial professional, so I don't know what your realities are in terms of your assets and also your risk appetite. So please take your due diligence before you invest on something that probably will be taught in this video. Anything here is not financial advice. This is just me sharing the things I learned from the experience and hopefully you gain a thing or two from it. There are 3 things that I learned from when I was thinking through about the experience of why this happened. And the first thing was, for me, I think that I lost this much value in the stock simply because I did not take my due diligence when I entered into the stock market. I remember that I bought this stock because a friend told me to do so. And that was it. I never even knew what China Bank's plans were. It sounded logical at the time. It sounded like something that was still in the infancy stage that can still become a big player unlike the big banks. And I was thinking that okay, maybe there's some reason to the logic, and I also trusted this friend because he has been trading for some time. Now the little that I know is that this person may have actually exited at a higher amount because he was probably actively managing his portfolio, unlike me where I bought in and then basically just held off for the longest time. I do not have the technical capability to actually analyze different stocks, nor did I have the time and willpower, to be honest, to actually take a look at the stocks into a regular basis. This is a common mistake that people jump into when they start thinking about joining the stock market without preparing the due diligence for each purchase. Think about this purchase as any other purchase of, say, for example, something more tangible, say a real estate property. When you buy real estate property, you're thinking that this property will either appreciate in value or you would earn rent income from the same property. In the same way, when you buy a stock, you're hoping that the value of the company will increase or that you get dividends from the company once they release their dividends. Now, I didn't understand any of the fundamentals of the stock, and I think this is what I am learning because if I don't understand these things at the start, then it's very hard for me to actually make sound conclusions on where to put my money. The second thing I learned from this experience is to actually put a diversified portfolio. Now, I shared with you that the China Bank stock that I put in lost about half its value over the past 5 years. The good part is that I actually tried to learn in the last few years of trying to diversify the portfolio that I have in the stock market. I also bought stocks of companies like SM or BDO, and also even buying ABS-CBN shares from before. Now that I have this portfolio of stocks, they're not yet the best way of diversification, and that's not what I'm trying to teach you here. This is me also trying to learn my way. But at least what I'm also seeing right now is that my portfolio, because they belong to different sectors and I have holdings in different companies, they also tend to offset each other. If you can see that image on screen, I'm actually earning more than 100% on my SM Prime holding stock, which is offsetting the hurt that I'm getting from my China Bank investment. This is the reality of the stock market. The stock market is unpredictable and nobody really knows what's gonna happen in the next minute or in the next few years. So every time you put money into the stock market, you have to really be sure that you understand the risk tolerance that you can take, meaning how much of risk can you actually accept of being able to gain but also being able to lose money. In the stock market, while I am not an advocate of buying individual stocks, and I'll talk about that in a separate video, I also did this because I wanted to learn how peso cost averaging works. In the simple concept, peso cost averaging is basically figuring out good companies, which typically are called blue chip companies, 30 of the most stable or the good track record companies in the Philippines, trying to figure out which ones you want to invest in and do regular deposits into those stocks so that when you buy low and when you buy high, you actually get the average of every buying purchase that you had in that stock. So if you bought, for example, a stock for 40 pesos and then you bought it for 60 pesos tomorrow or in the next month, then your average for those two stocks is actually 50 pesos. So you're trying to hedge your way against the market movements, and you're trying to also make sure that the money that you bought into the stock is not fully on its highest point, which can lead you to massive losses when the stock changes. The last thing I learned from this experience is that when you enter into investments, you also should not only look at the percentage gains or percentage returns that you see in prospectuses or even sometimes in a website or in a blog. Typically, what people will tell you, and the footnote, is that past performance does not guarantee future results. And you probably heard that a million times and it now becomes too desensitized to mean anything. But it really is true. If a fund performed really well over the past 10, 20 years, there's no guarantee that it will perform similarly in the next 10 or 20 years. And that's why in the last learning that I'm gonna share with you today, I need you to also take into account timing, or what they call the investment horizon, into the investment decision that you are about to make. What does this mean? If you need money in the short term, for example, you need something in the next 6 months, because of the volatility in price, putting it into stocks can be a terrible idea because you don't have the value of being able to wait it out. In the same case as me, my China Bank stocks are long-term investments. So even if I am actually losing 46% now, I am hoping still that in the next few years, China Bank will find its bearings and start to make up ground on the value of that stock. I can only do this because I don't technically need the money now that I placed into the China Bank stock. So at least my loss right now is just paper loss in theory. If you are investing for something in the mid to long term, there are different investments that will be suited for you. I suggest talking to a qualified fiduciary financial advisor to be able to guide you through the investment decision. Another typical example for this is for retirees. When you're about to retire, which my aunts are, and I've been telling them that they can only choose so much options because their time horizon is now limited. So what I actually tell them is, while we are trying to get the maximum return for the money that they have, they also cannot put it into a lot of volatile investments like the stock market, because that would jeopardize their retirement, which is only maybe a few years away from now. So, time horizon, diversification, and you preparing for what you would feel as uncharted territory in the stock market are three of the basic things that you have to understand in concept for you to be able to navigate through these very treacherous waters. This is not obviously all that you need to do when you join the stock market, but these are some of the learnings that I had when I found that it truly can happen to you that you will lose 50% or even sometimes more. But what I also learned is that with a few items of preparation, learning through how to effectively manage that risk, you can also probably have some cases where you can gain something very substantial that you saw in my other stocks in my portfolio. If you're interested into learning more about investing or other things, please subscribe to the channel. We're gonna talk about stocks and even other forms of investment in the future. If you are not sure and if you are not very confident that you're ready to start investing, I'm gonna link a video right here because this video will tell you all about preparing for the right steps towards your financial independence journey, and it actually talks about a couple of steps that I think you should take into account before you start investing into something very volatile, very unstable like the stock market. By taking the steps, you would actually see the things that I feel you should sequentially start with before you go into the stock market, because this will provide a solid base and a solid foundation for you to learn and execute before you go into these uncharted waters. I hope this was of value. If it did, please hit the like button, the subscribe button, and the notification bell so that you are notified for other investments, stocks, and even other kinds of topics on personal finance that we'll upload shortly. Thank you and hope to see you again.